Good day, my name is Christel from Frans, the Klerk Independent Technical Analyst. This week we want to kick off with Mondi. We're going to use line graphs, and that red line represents the 40-week moving average. These are weekly graphs on the time frame, and this is the stochastic indicator. The stochastic indicator is just one of the type of indicators one can use to highlight overbought or oversold levels. Overbought on the stochastic is when it trades or develops in the 80 and 90 zone, and oversold when it trades below a 20 or a 10. Now, a divergence, positive divergence, is from oversold levels when that blue line, which represents the K line, breaks upwards through your orange line. And we talk about a negative divergence when the orange line, the blue line, break through the orange line downwards. Then we talk about a negative divergence. Oversold when the probability of the instrument to rise to higher levels is there. Overbought is when the probability of the instrument to retrace is there. Matt wanted us to look at Mondi. Now, we can see one, the stochastic is in no man's land. It's sitting at 68. It's not overbought yet, and it's also not oversold. But Matt, we can see that the next higher low on Mondi was confirmed at 371 Rand 95. Now, a higher low is when an instrument pulls back, finds support, bounces, retrace a little bit, find support again, and bounce. Now, if that support level is a little bit higher than the previous support, once that previous resistance changes into a support, we call that the next higher low. So we can see Mondi pulled back again. Again, that support was a little bit higher than this support. And once that resistance was changed into a support, the next higher low was confirmed. Again, a pullback. There we see lower highs. But again, a beautiful small cup and handle formation where Mondi pulled back, found support, bounced again. And when that level, I'm going to give you that exact level on the line graph, at 371 Rand 95, changed into a support, the next higher low on Mondi was confirmed. Now the big test, and remember, on a line graph, we only have closing prices. The line dotted, the line represents the closing prices, and those are all linked, and that is what basically makes the line graph. We do not see the opening, the closing, the high or the low of the session as we do with candle graphs. So at the moment, we can see that the next previous high was in that week of the 4th of January, and that closing price was 388 Rand 13. So Mondi has to rise above 388 Rand 13 on a close on a Friday, because these are weekly graphs, and in order for us to assume that the momentum to the top can continue. If Mondi does not break 388.13 into a support and starts to lose momentum from here, that neckline of 371.95 and that previous low at 365.29 will be the support levels that either has to remain in place in order for us to believe that the momentum can escalate, or it will start to highlight weakness. I think you can still hold on to this graph, Matt. A critical protection level will be that 371 Rand 95, which is the neckline of that small cup and handle formation that was confirmed on Mondi. And again, your stochastic, look there, your K line, the blue one, the orange line, the D line is still pointing upwards. It's not overbought yet. It will only be overbought above an 80 or a 90 zone. Rhodia wanted us to look at Discovery, a share that many just have in their portfolio because of the brand and what they represent. But we can see also time and time again, higher lows was confirmed, and a beautiful technical positive goodbye keys when Discovery pulled back in the week of the 26th of October, found stunning support there on that 40-week moving average at 107 Rand 29 and bounced from it. There was also a small inverse head and shoulder formation that confirmed beautifully and has played out with the left shoulder, head, and the right shoulder. And that high there, closing price at 154.68 and a pullback. But now the critical level is, will Discovery be able to change that previous resistance? And that was in, I'll give you that exact level now, in the week of the 8th of February, and that closing price is waiting at 145 Rand 32. Will Discovery be able to change 145.32 into a support in order to confirm this possible cup and handle formation to maybe go back to that level of 154.68? Should there not be enough buyers to take Discovery through that 145.32 and that previous support waiting in that week of the 22nd of February at 141.65 starts to change into a resistance, I would start to see lower highs. Why do I say that? Because this high is a little bit lower than this high. It's just a little bit lower than that one. It's a little bit lower than that one, which always implies a loss of momentum. So the share needs to find enough buyers to go through 145.32 below 141.65. I will be concerned about Discovery. The critical level is obviously that red line, the 40-week moving average, and that is waiting at 127.36. Why is that such an important level? Because above a 40-week moving average, the long-term sentiment towards the share is always positive, and below it, we confirm that the sentiment for long-term investors is negative. But also take note here, Lorata. This was a beautiful technical goodbye kiss. This was a testing zone. The share had to see if there's enough buyers. But look, if I look at the history, time and time again, Discovery could just not find enough buyers to lift it through its 40-week moving average. So that is a critical level that tells you, draws that line in the sand to say, what is the sentiment towards this share for long-term investors, positive or negative? So keep an eye on that 40-week moving average, waiting at 127 Rand 36. Easy Lazy London on Twitter wanted us to look at the Rhodium ETF. And One Invest has got a Rhodium ETF, so I'm assuming it's this one. We can see that back in the 16th of March, the share tested the 40-week moving average, kept it at a support, pulled back, tested it again for the last time on the 4th of May, and ever since then have managed to just rise to higher levels. But we can see in the week of the 1st of March, there was a little bit of a pullback, found resistance at 4,240 Rand and 31 cents. And now the big question is, will the share go back to this strong support, which is waiting there at 3,167 Rand 60, or will it manage to find a support somewhere and bounce again? So below 3,167 Rand 60, the weakness in the Rhodium ETF will be confirmed, but above 4,240.31, which is that high on the line graph, I can assume that the momentum to the top will continue again. Take note, obviously the instrument is overbought because of the rally it's had. You've got a beautiful negative divergence where that K line broke downwards through your orange line, which tells you the probability of the instrument to pull back is more likely. The critical level again is the 40-week moving average, waiting at 2,293 Rand 36. Below that level, the long-term sentiment towards this Rhodium ETF will change to negative. We had quite a few questions on the US market. I think being so toppish and continuing to rally, a lot of investors need to make a couple of decisions. Now, John wanted us to look at Revlon. Now, massive rally, went as low as about $4.10, rise quickly back in November to $14.97. But John, we are approaching a critical level here on Revlon, and that is waiting at $10.18. Below $10.18, my next lower high will be confirmed. Why? Because the instrument rose, pulled back, bounced, pulled back, bounced. And every time it bounced, the high was a little bit lower than the previous one. And that is seen as lower highs. Confirmation will be when that support that is waiting at $10.18, when that level changes into a resistance. Also take note how close that is to my 40-week moving average. And that is waiting at $9.23. Below that level, the lower high will be confirmed, but also an inverse cup and handle with a cup and a handle, and an inverse cup and handle is a negative formation. So below that neckline, as I've said, $10.18, especially below the 40-week moving average of $9.23. What is the full target of this inverse cup and handle? It's the length of the cup projected downwards from the handle where the formation will be confirmed, which means Revlon can go back to about $5.63. I can assume again that the momentum to the top will continue, or there's a possibility that it can rise when that level of $12.37, $12.90, and $14.30 starts to change into a support again. Also take note, Revlon is in oversold territory, but the lines are still pointing upwards. We need to wait for a divergence where that K line starts to break upwards through your orange line. You'll probably start to see that on the line graph as well, and that will maybe be an ideal place to add to the position or to consider a new one.